Welcome back to the Phuble podcast. It is Friday, August 9th, 2019. I'm coming back at you guys for this past week. Just going to do a really quick overview of what happened in the latter part of the week. I apologize for the audio of the last podcast. I had some technical difficulties when I exported it into the YouTube video. And then I also apologize for the graphs. I edited the graphs into the video the next day. So that's why when I was talking about the stock prices, they were a little off compared to what the graphs behind me were showing. So I apologize for that. Shouldn't have an issue this week though, because it is the end of the week. And of course, stocks don't trade on the weekends. Let's go over the major indices real fast. NASDAQ finished the week at 7,959. Dow Jones finished the week at 26,287. The S&P finished the week at 2,918. All major indices were down on Friday, but they are up for this past week, which is really good for the stock market because, like I mentioned on Wednesday's podcast, they were down a lot 2 weeks ago. So it's good that they bounced back. It was just market correction, I think, last week. The S&P looks pretty good. I think the S&P is probably going to outperform the NASDAQ and the Dow Jones going into the end of the year. But I think the NASDAQ and the Dow will still have positive runs just based off recent earnings. I don't think the Dow's going to go too much higher for the remainder of the year, and then I predict we're going to hit economic slowdown probably beginning of next year. S&P, of course, is just large market cap companies, so I really think they will outperform. I still think the NASDAQ and the Dow Jones are going to do well, but I think the S&P is going to do better. Okay, crude oil. We were talking about crude oil a couple weeks ago with Iran. It's decreased over the past month. WTI is currently at $54 and Brent is currently at $58. They're both down from the 60s where it was in early July. It did bounce up with the Iran news. Oil had a positive day today, but overall oil's been going down, and I think it's going to keep going down, especially if Venezuela gets help from China, which they are. China's actually investing in Venezuela oil refineries. I guess you can call it investing. It's not really investing. They're just sending engineers over to help refurbish, if you will, the absolutely devastated oil refineries in Venezuela. So that's going to increase oil output, which is going to drive the price down for both WTI and Brent. Probably will finish out the year mid 50s, maybe low 50s, barring nothing happens with Iran. Now, if Iran really cuts their output, it's going to jump oil back up over the 60s, but we'll see. Okay, price of gold. Gold is doing really well. I think it's around 1,500 right now. It's had a great year. I think it's going to keep going up, especially if the U.S. hits an economic recession. Gold's going to keep going up. It's actually had a really good run in August. Gold has. It's increased from just below 1450 to around 1508 right now at the filming of this podcast. You can see the price of gold behind me right now. I assume it's going to keep going up. Gold's going to finish out the year strong, I think, especially if the economy starts slowing down. Gold is definitely going to finish out the year strong. In other news, PG&E, the company that was deemed responsible for the Malibu forest fires last year in California, they filed bankruptcy because they were responsible for $30 billion in lawsuits and fines. They are actually getting their assets bought by some counties around California. When they filed for bankruptcy last year, their stock got absolutely crushed. I'm pretty sure it went all the way down to like below $8 or $7. And it bounced back up, and now it's a positive that counties around California are actually going to be buying their assets, so that stock is probably going to move higher, most likely. I still wouldn't invest in it. It's very, very risky because they did file for bankruptcy, although if you were to have bought it like before February 2019, you would have gained like over 200-300% if you got it at the lows in 2019. But I wouldn't invest in them just some news that their assets are being bought out. So if you were to want to invest in a risky stock, this would probably be a great pickup, because if their assets do get bought, they will increase in stock price. Uber released their earnings report for Q2 of 2019. I'll just read over those real fast. So Uber reported their adjusted revenue at $2.87 billion and $3.05 billion was expected. Their gross bookings, which include like taxes, fees that they place on customers, that's considered outside their business, which would just be like the fee of going from point A to point B, was $15.75 billion. And it was expected that they would have $15.83 billion. Their EBITDA, which is earnings before interest, taxes, depreciation, and amortization, was a loss of $656 million. $979 million was expected, but their net loss in total was $5.23 billion, which is a lot. And that equaled a loss of $4.72 per share. It was expected that they would only have a loss of $3.12 per share. So they are incurring a lot of losses. They're not profitable. They're just not profitable. You can see their stock behind me right now. Their year to date, since they released their IPO back in May, has been just stagnant. The stock has been just stagnant. It's not going anywhere. It's probably not going to go anywhere in the future. Their market cap is almost $70 billion, and they are not profitable at all. They're not going to be profitable for a while. They rely on user adoption, and there are a lot of companies in the ride-sharing space, and it's very difficult. It's a very difficult market. I don't know. I wouldn't touch Uber. I mean, they had good revenue, but it's just, I would wait till they get their costs down, their expenses down, and they can actually not become profitable, because it's going to be probably a very long time until they become profitable, but at least like decrease that $5 billion loss. Like that is a huge loss to incur. Moving on, CBS-Viacom probably going to merge. The two companies agreed on the restructuring of the combined company's board. So basically, Sherry Redstone, who is a large shareholder in National Amusements, which controls both Viacom and CBS Corporation, and the voting power within those two corporations, has really been pushing for this merger. There was a lot of headbutting when Les Moonves was CEO of the CBS Corporation. She just wants to combine the two companies purely to increase the value of Viacom, because Viacom, it's a absolutely terrible stock to own. It just historically has been. I think it's done decently this past year. Yeah, it's done okay. You can see the chart behind me. She wants to merge them so that CBS can kind of help lift Viacom out of their hole, if you will. Viacom owns Nickelodeon, Paramount Pictures, Comedy Central, Paramount Network, BET, and DreamWorks, as well as a bunch of other channels and production companies. I would not go near Viacom at all. CBS might be beneficial, because I think they were talking about a 1 share of Viacom for every 0.6 shares of CBS, which you can see the chart behind me. It's a good stock. If you were to buy CBS stock before this merger happened, I would buy it, and then as soon as the merger is announced, I would probably look to sell it, or just wait until you gain the shares of Viacom and then sell it, because Viacom is not a company that you want to own. It's really not. I mean, they have a business model that dates back to like the early 2000s. Like, they're not updating their model at all, and it's just, I mean, you're not going to gain any growth out of it at all. I would be careful with CBS though. It's a good stock to own if they weren't merging, but just pairing with Viacom is it's awful. ever since Les Munez got accused of sexual harassment, the stock has gone down, but it still is a good stock. I would have thought that it would have finished up above $50 this year, but with this merger, of course, there is going to be no more CBS stock. It'll just be Viacom. Last piece of news for the week, China is dealing with a lot with Hong Kong. So if you don't know, Hong Kong has massive protests right now because of an extradition law that the central government in Beijing wanted to enforce on Hong Kong. Basically, it stated that anyone in Hong Kong could be extradited to mainland China and left to deal with the government there. It basically allowed mainland China to take anyone out of Hong Kong. Obviously, that did not go over well with the pro-democratic citizens of Hong Kong. So they started protesting about a month ago. And protests have been relatively tame. There has been some sparks of violence, but there hasn't really been a lot. The central government in China doesn't want to use military force to suppress these protests, one. Two, they want to wait until the protesters turn violent and then hopefully gain a backing of the majority of the people in Hong Kong who aren't protesting. Their thought is, okay, if these protests turn violent, a majority of the people are going to back the central government in Beijing and want the central government to interfere and stop these protests. I don't know what's going to happen with Hong Kong. It's a difficult situation. The Chinese government isn't doing anything. The people aren't stopping. They're not going to stop. Xi Jinping is in a bind right now. Not only with that, but also the U.S. trade agreement. It's going to weigh a lot on the Chinese economy. It already has, especially on the stock market in Hong Kong, the Hang Seng. You can see the chart behind me. It's going to be rough. I don't know what's going to happen with those protests. I think Xi Jinping is going to have to back down because Hong Kong supports basically the entire Chinese economy. It does. So he can't look bad in the international environment by suppressing these protests, especially if they're peaceful. And he also can't look bad in the perception of the foreign investors in Hong Kong because, like I said, they back basically Hong Kong backs the entire Chinese economy. He'll probably give in. The Hang Seng will go back up. The Hong Kong economy will go back up. China is probably still going to have some economic decline, especially if a trade deal doesn't get worked out before the presidential election. But I assume the Hang Seng is going to go back up in the coming months once this thing gets settled. Okay, guys, that's the weekly roundup. I guess you could call the weekly overview. Thank you so much for watching the Phuble podcast, which of course is sponsored by the social networking platform for any and all investors, Phuble. Make sure to subscribe. We'll be here next week. And happy investing. Be careful, but happy investing.